How's it going? How's everybody's day been? Evening, dude. I'm good. I'm good. Really good. Thank you. Well, that's nice. Awesome stuff. I'm glad you could all make it. So we'll leave it a couple of minutes so everybody gets in the room, and then we'll get started. So this webinar is going to run about an hour long, and just to set a little bit of a tone in the agenda, what I'm going to start off with is just giving you guys and girls a bit of a backstory to my journey of when I started Forex and how I actually transitioned into this style. So I think that's going to really give you an indication of why I trade this way, why I started to trade this way, and and how I used to trade and why this has helped me so much. So I want to start off with that, give you a bit of a transparency of my journey, and then we're going to go into a bit of chart work, go through the basic and the core fundamentals of Falcon, of why we're trading that way, just to give you a good introduction. And then, of course, we'll have a Q&A at the end as well. So if anybody has any specific questions, of course, the longer ones, hold those towards the end of the webinar, and then we'll go through that. But it's going to be an awesome webinar, and I can't wait to dig into these concepts because I think it's going to help massively. Hey guys, definitely, definitely. So some of you might be joining us and you may have joined us recently, and it'll be good to give you a real rundown of really why we look at structure in this way. It's going to help a lot. Nice, nice. How's it going, dude? From the train to London, dedication, love it. Well, I'm glad you could all make it. I hope you had a great weekend overall. And let's begin. So, firstly, I want to start off with a bit of my backstory so you know. So, for those of you who know me, I'm 27 and I've been involved in trading for many years now. So, when I originally started, because this is a question that I get asked a lot, I started when I was 18 years old. So, as you can imagine, as an 18-year-old in the world of Forex, it can get very daunting. There's a lot of information out there. You don't really know where to start. So, the natural thing to do is to look online, do some free stuff, all that kind of good stuff. But what I've done is I kind of went all in right from the beginning. So, what I originally started off, I didn't think I was going to be involved in Forex. I was actually studying to be a bridge engineer. And at this time, I'm 17 years old. And I thought that this was to be my career. Within my family, everybody went down the higher education route, architect, property developer, cancer surgeon, all these kind of things. So for me to go into something completely different just wasn't good in terms of what it would look like for my family anyway. It was all about like what certificates do you have? And I think we can all resonate with that overall. So what happened for me is that I got made redundant. So I'm 17 years old. I think that this is what I'm going to do for the rest of my life. I thought I was set. I had an apprenticeship. I was going to college 1 day a week while I was being paid and learning. Great experience. A year down the line, I'm made redundant. So I can see nearly 50 people within the room, all just walking out. And what really hit it for me was the principal engineers, because I remember them. Michael Mason, I think his name was. He was the one that used to mentor me a lot, and he's over 50 years old. He's been a principal engineer for years. He's on something like 60 to 70,000 pound a year. He has a lifestyle, kids, mortgage, and I remember him saying when he just was carrying that box out in front of his hands, all of his stuff, I just don't know what I'm going to do now. Who's going to employ a 55-year-old? They want someone who's younger. He was maybe 10 years away from retirement. He's planned it all out because he used to speak to everybody about it. And then literally it just went. So for me in that moment, even though I was disappointed because I thought that's where I was going to go and that was where it was going to lead in my direction, I was going to be a bridge engineer, work on some really exciting projects. Bearing in mind, this is a massive company. I think it was the second largest in the UK, and it just went under that office. So they just got rid of about 50 people, and there was only 4 people left, like the line managers, etc. So I was left made redundant. with a bad taste in my mouth. But it was that image, it was that moment that I remember when he walked out. I said to myself, I don't want to be in that position where I feel like, am I secure in a job? Because in reality, that can just happen. And then what? So it's not really that secure, right? So being in that type of situation, and I think some of us within the community may have even been in those type of situations, it's not secure. The securest thing you can do is have something you can rely on yourself. So going into that, I've got a tiny bit of savings, nothing crazy, about £5,000. And then I'm thinking, what do I want to do? I really don't want to work for anyone now because I had that bad taste in my mouth that this is just going to happen again. So I felt like I wanted to find something that I was able to rely on. So one of my friends told me about a seminar in London, and then I went to a seminar about Forex, and it happened to be the course that I went on. And that course was quite a lot of my savings. So I think it was about £3,000 at the time. I remember it was a 2-day intensive course in London. I think some of the people, I don't want to start naming courses and things like that, as you can imagine, but I think some people in the community have been on those courses. So I invested pretty much all of my savings with a lot of money into the rest of the coaching. So that pretty much all went, and I was left with about £500. And I originally started with stocks. So they had a Forex course and they had a stocks course. Has anybody in here traded stocks as well? Or is it just Forex? You have before? Nice. Oh, you started with stocks as well? Awesome. So I started with stocks and I was learning that way. And again, same kind of ways, pivots, EMAs, support resistance, those kind of things. A few sort of continuations here and there, but it was mainly about MACD, lagging indicators, all those kind of things, lower lows, higher lows, that kind of stuff. So by learning that, I've done the course and I actually built my account up quite nicely, but pure fluke, I was risking way too much. I built my account up from 500 to about £10,000 in about 6 months, and then I lost all of it. Now I didn't lose all of it by being stupid and just risking it all at once or anything like that. It was actually the company that went into liquidation. So it was a £1 billion company in New York. They went into liquidation, and I lost that. And it took about 4 years after that until I actually got some sort of compensation back. So at that point, I kind of looked back and realized I only done well out of fluke because I was risking too much. They didn't really hone in on the risk management enough. So I felt like it was okay to, this time I'm just going to risk £200 rather than actually sticking to the risk model. So at that point, I've lost all of that, thinking, I don't really know what I'm going to do now. Maybe just this stocks, Forex type thing is just not for me. So then I went into the city and became a broker. And this is where everything completely changed. I'm very, very grateful that I've done this because I was in the city for about 4 years. And during that period, I retouched on Forex after about a year of being in the city once I built up some more funds. And then I heard about people trading Forex instead of stocks. And I thought, do you know what? How about I try out Forex this time instead of stocks? Because stocks seem to be quite tricky. I'm sure some of you have traded stocks. You'd realize with the double listed companies, there's bigger gaps. Sometimes it'd be quite risky, right? So I thought, do you know what? Let's go into Forex. I've heard a lot about it. And during that period, I went on about 2 or 3 other courses, just lower course. It wasn't expensive courses, just more of those smaller courses that you see online. And it really much just came to the same conclusion. It was just another version of support and resistance, another version of a different EMA. It was all those kind of things. So by doing that, I realized that this just isn't working for me. I kind of had my good months, my bad months, and I just thought there must be something more. There must be something more. I always got that phrase that people say, it's all about psychology. And you would have thousands and thousands, if not millions of people just blaming themselves. It must be the psychology. The reason why I'm not a good trader is because of the psychology, nothing to do with the technicals. And that really was the big thing for me, because at this point, I've been surrounded by very, very successful people, which I'm grateful for. So I'd been already doing personal development for years. At this point, 3 or 4 years in, I've read all of these books. I've read all these personal development books that people were picking up at a later stage. So for me, I already classed myself as having a good mindset. I've been working as a broker in the city. It was normal to make £4,000 to £5,000 in a month. So it was more than the average at a very, very young age. So for me coming into Forex, I didn't really have any limiting beliefs. So I thought to myself, surely it's not mindset, because I know I've got a good mindset because I've already achieved goals. I've already done well for myself. And now it's just, is it something to do with the technicals? And I just thought there must be something more out there. So I looked at the figures. If 90% is psychology and 10% of technicals, could it be that that 10% of technicals that people are disregarding the level of skill you actually need for that 10%. What if you only know, and this is what I was thinking at the time, I thought, what if I only know 2% out of the 10%? What if I only know just a small segment of the technicals? And is it because I need to know more knowledge about the technicals to then actually work on my mindset that is going to be congruent with that? Because what's the point of having this incredible mindset if you only know 2% of that 10%? And that's what made me really stumble into my own style. So I started experimenting with a few things. I started to remove things like MACD. I'm sure some of you have used MACD, or you may even still use MACD. Support and resistance. MACD was the first one. You'll never see MACD on my chart. I got rid of that MACD, and then I started to remove other things. So I used to have the 200, the 100, the 50, the 60, the 20, and the 10 EMA. So I had them all, as you can imagine, a very clustered chart. And then I started to remove them one by one. And then eventually I just had the 50 EMA and the 20 EMA. And then I thought, you know what, let's get rid of the 20 and just leave the 50. So eventually I've still got support and resistance at this stage. And then I've still got these EMAs. And I started to notice, because this is when I started to study patterns, I realized that patterns were conflicting with the support and resistance. As you can see, my chart's pretty clean, right? You guys know that. They were conflicting with that. So then I started to remove that. So whenever I used to draw a pattern, for example, if I had a resistance line in or a support line, I used to, just for a moment, I didn't really know why I was doing it at the time, but I would delete the support and resistance just so I can see the pattern more clearly. And eventually I realized I don't need that. Why am I even putting it back on? Because it's just not necessary. Because with support and resistance, the typical concept is that previous data will then predict the future price, which isn't the case, right? If you've got support and resistance, that previous support was here, as you can see, resistance, now it's new support, and that means that every single time the majority of the time when it gets there, it's going to bounce off, when in reality, that's not the case. Where with patterns, you're predicting something that repeats itself on a consistent basis, which is proven from day one. So I knew there was something missing, and I knew that I don't want to feel that. I mean, we've all felt it, that anxiety, right? How many of you have felt that anxiety when you're looking at the charts and it almost feels like a massive headache, and that sometimes it's bounced off that resistance and you've sold it, and then the next time it goes up to the resistance, this time it broke through, right? There's all these kind of things, and there was always an underlying reason for why that was happening. And I realized, you know what, I'm going to really figure out what's going on here. So then my results started to get better as I started to trade patterns, and I was literally just looking at continuation patterns and reversal. So I was literally looking at continuation patterns either to the upside or a continuation pattern to the downside, and then I was just looking at reversal. So I was just looking at the market as, right, that's an ascending channel, it's a nice reversal, and just focusing on patterns within the structure. Or I was looking at the descending channel and then looking at reversals for buys. So I kept it very simple. It was just descending channel, ascending channel, continuation bull flag to the upside, and continuation bear flag to the downside. So just keeping it as simple as possible within the structure, and then realizing, hold on a minute, the market seems to be moving this way all the time. And then I realized that the market is either in an impulsive phase or a corrective phase. I used to think it's just a consolidation, when I realized that this is the impulse and that's just a correction. And once you can identify what phase, I figured out, looking at my own self-review, looking at trades that just didn't work out, I was trading and not really knowing what it was. I was just going off of high test candles, going off of candle-shaped formations. And in reality, sometimes it worked, sometimes it didn't. Sometimes I made 5% in the trade. Sometimes I was in drawdown for a couple of months. And I thought, surely it can't be like this. There must be a better way. And that's how I really, really stumbled across into my own style. And then what I started to do is I started to write down rules, because I knew when my results were getting better and better, and this is after like 4 years, by the way, it doesn't have to take everybody this long. This is the reason why I created Falcon in the first place, because the biggest thing I can give for people is time. If I can save people time, I mean, ask yourself, how valuable is that to you? To me, if someone can save me time, that is the best thing that can happen. But for me, I just thought, right, after 4 years, my results are getting good now. Let's write down some rules for them. I didn't realize I actually had a strategy. I was, to be honest, if I'm completely honest, I was quite embarrassed to share my analysis with others, because I thought, well, I trade completely different to everybody else. I've made this myself. It's my own strategy. And what if people would then look at it and say, well, why haven't you got the EMA? Why have you got that key level out? Why have you not got that support and that resistance? And I didn't really have a reason to justify it too much. I just had a subconscious skill that I was getting good at it. It was working for me, and I didn't really know how. I was just picking up these patterns, and that pattern recognition for me was a new experience. So then I started writing what happens. I'm doing this. So I started to write my strategy down on paper. And after doing that for a couple of years, I realized this was solid. My results kept getting bigger and bigger. Then I went on to get an investment, etc. And then after 2 years of being consistent, I then started to mentor people on a one-to-one basis. It was only here and there, and I started to notice, because it's all good being a good trader, but if you can't transfer that information across to somebody, then they're never going to absorb it. And I realized one of my skills were that I could transfer that information in a simple way that people can actually understand it, rather than making it, far too complicated. So fast tracking that, helping people to be successful. I noticed that the people that I coached was getting really good results, breaking through limiting beliefs. Some of these people were thinking, they used to think 5% is a good month. How many of you right now think that 5%, or you used to think that 5% was a good month to get, and then your limiting beliefs absolutely got smashed out the water? So for me, I realized, hold on a minute, I've got something here that can benefit people, and people are going to waste money hand over fist for the next years and years, and forever think that it's their fault, that the reason why they're not successful is just psychology alone, and it's got nothing to do with the technicals. And they're going to be going down that rabbit hole thinking that the reason why they're not successful is because of them, when in reality there's a missing piece of information, there's missing parts of the puzzle that not many people know about. And again, there's no fault of their own. Remember, people only know what they know. You can't blame someone for teaching you in the way. Even the people that I've been taught by for the last 8-9 years, I've been on various courses, and they taught me to the best of their ability. They showed me what they thought. And if you think that what you have is the best thing since sliced bread, and that it's worked for you in the past, then you're going to share that with people. But there's always more effective and better ways to do things. And I think organically, I've found that, and we can backtest that from day one, which this is why I'm incredibly excited to see the growth in the community already and what that's going to do. So for me, just to summarize, being frustrated for a long period of time in networking, and I mean with hundreds and hundreds of different traders, and noticing a common factor that people just don't realize how simple that you need to keep it, and how effective trading structure can be, and just keeping the art of simplicity, understanding the nature of the market, just a few core principles. And within time, what you're to become is you're going to become the best trader you can be. Because what we're doing here is we're not going off of any lagging indicators of what might happen. We're going off with price structure, going off with pattern identification. So it's not a matter of if, it's when. Because once you backtest, you forecast, you do these things, you're going to understand how these patterns behave. What's going to happen after that is your entries. You're going to get better with your management, your trees. This is the fine-tuning part, which you're going to learn in Falcon as time goes on. And everybody's journey is a little bit different. Some people pick it up really quick. Some people take it a little bit longer. There's no rush. As long as you know and you believe and can feel confident in the knowledge that trading this way, you're going to be the best version of yourself as a trader. And it's something you can sustain, because we can look back from day one and see the market has been moving in an impulsive or corrective phase since day one. That is a fact. And the fact that we can evolve with the market means one thing. It means for the next 10 to 20 years, once you've got this, once you've nailed this down, you know your trading plan, you know your go-to setups, you're going to be able to execute this for the next 10, 20, 30 years. And if something changes, if there's a few different conditions within the market, you're going to evolve with that, because the strategy allows you to evolve with it. That's the key thing about it. So I just wanted to give you a bit of a backstory and let you know how I started, how many years I've been in it, and why I'm actually teaching at this day. I feel like after 9 years, it's a long period of time, and I can see how, if I could speed up my journey, I've easily wasted 4 years. 4 years of my life could have been sped up. It doesn't have to take everybody this long. And that's exactly why when you see the progression with people in the community, it can happen in 3 to 6 months when you really knuckle down. Is absolutely phenomenal. And there's a reason for that, because you don't need to keep making the mistakes, and you're around successful people. And that's the key thing here. So I hope you enjoyed that, and I just wanted to share with you, I know what it's like to struggle to bang my head against the brick wall thinking, should I do this, should I do that, should I remove this, should I remove that? I've done it 10 times over, and I want to save people as much time as possible. But let's get into the technical side. So a little bit of backstory by myself, and let's get into the core foundations of Falcon. and drawing structure, etc. So what I want to do is start off with USD CAD. So when we keep it simple and we look at structure, right now you can see this looks pretty clean, right? I just want to zoom out here and go on to, let's go to the monthly chart. So if I go to the monthly chart on USD CAD, what I want to do firstly within structure is I want to identify the parameters that we're in. So make sure that you take notes, sit back, relax, and just focus on how simple we'll keep it. So as you can see here, by looking at this structure, I want to identify what is the most important bit of information. So some of you may have taken trend lines from 1994 and all this kind of stuff. You don't necessarily need that. What I found is focusing on the most recent structure gives us the most reliability factor. So looking at this phase here, we can see this looks nice. We have 1, 2 touches here, and then the parallel line of 1, 2. So we've got the overall outer structure here. And looking at it here, you can see that the market is either in a state of impulse and correction, right? So as you can see here, impulse, correction. So this is the continuation pattern that I explained earlier. So we've got our impulse, continuation pattern. So we're looking at this on such a bigger time frame here on the monthly. And when you look at it from that perspective, this gives us a bigger indication. So look at how clean structure is. We can see eventually, we don't know how long a correction could last because we know that it's very possible this could come down one more time, be in a correction, and then still pop to the upside. But what we do know is that this has come from an impulse. This is clearly a sideways correction. This is a continuation pattern to head up longer term. So what we do with structure, once we identify, we know what phase we're in. So at the moment, we can all agree, what phase do we think we're in on USD CAD? I think we could all agree at this stage, this is the correct phase. Then within the corrective phase, we know we're going to have impulses and corrections. So if we work our way down, so if I go to the weekly chart, very, very simple. We've got our impulse, correction, impulse, correction. So at this stage, we're anticipating that we're going to get one more move down potentially for the correction, or this is going to break up from here, and this will be the bigger continuation. So the bigger move on the higher time frame is suggesting this is a big impulse, and this is just one big sideways correction. So eventually, this will break to the upside. So whether we break out now or go back down for one more continuation and then break to the upside remains to be seen. So then what we do in that kind of situation is we see how clean the structure is, and then we can act accordingly through backtesting, through forecasting, and really understanding that. But one thing I want to show you why you're going to benefit from this. Some of you have maybe traded support and resistance in the past and things like that. Let's take a look at, let's have a look at the daily. So if we take a look at this previous correction, if we look at this previous correction and I was to put in, say, a resistance line around here, let's put it here, we've got a double top there. So we can see if this was a resistance line putting in and we was focusing on this trade at the time, and what we can really do here, which is really cool with the bar replay, we can actually go back and see that. If we look at that point, that would be a typical, it bounced off a resistance, it looks perfect, right? Looking at it from that perspective, this time it worked and it played out. But let's go into the lower time frames as I show you what I mean. One of the biggest reasons why I believe people are failing in the market, it's not your ability to spot a good trade. I believe even people that are not consistent have had some big trades. How many of you in the past, when let's say you wasn't consistent or not consistent, you've still banked 5 or 6% in a trade, but then still struggled to be consistent? You'd have good trades here and there, but then after you then undo your hard work. I think we can all resonate with that, right? It's happened to all of us, to myself for years. So what I realized is it the fact that I can't get in a good trade is the problem, or is it I'm just not understanding how to capitalize fully? So let's take a look at that actual price action that we have here. So double top, if you was trading resistance, support and resistance, you'd look at that, that would be a valid setup, right? Even on the daily chart, you can see that it's slowed down a little bit. You've got a reversal candle doji there. It would make sense to sell that from the double top. So if we go to the 1 hour chart and we have a look at this, is where we failed to capitalize. So on the 1 hour chart, if you was going to sell this, let's say you took a typical entry, we can do that with the long and short tool. So let's say you took an entry from here about a 60, 70 pip stop, let's say 60, and your target would be at the double bottom, right? So if your target's here at the double bottom for about 7.7%, and looking at it from this perspective, I don't doubt people's ability trading that way to be able to get that position. You may not get the full position, but let's say you bank 7, 6%. What is the key information and the missing point here is not your ability to get in that trade. It's the ability to understand when the market is giving us good setups, can you build on that position and can you scale in? So think of it like this. Let's say you make that big trade, you make 7% for argument's sake, but then you go on and then you have a couple of terrible trades and you hit, a few losses, 1% here, 1% there, and before you know it, you start undoing your hard work, and then you start taking average setups, and then it did a downward spiral, and you start taking more trades to the downside. We've seen it happen a lot, but by understanding how to scale in and how to capitalize, you're able to maximize your potential, and it's unlikely that if you do have a couple of losses after, it doesn't undo so much of your hard work. So looking at it from that perspective, what we will be doing is looking at this area as well. We've impulsed down, now to the continuation pattern. By adding to the continuation pattern and understanding what's happening there, let's take a look at that. If we're able to add, because most people will take that trade, let it run to the downside, they may bank a good position, but what we will do is we will add to that and be able to add an extra 4% to the trade. So you see the difference there. There's a difference between maybe banking 7% if you bank the full position without having any imaginary barriers, support. There's probably supports here that you would have closed out early anyway. But even with that being said, if you did take the full trade, you're missing out on these positions. So what the big thing is for me is not the fact that you're taking just average trades, it's that you're not capitalizing on trades, what is harming your results, right? So think about that from that perspective. How many trades could you look back on, which I know I could dissect every one of them. If we look back to those positions, how many times could we capitalize more on them? And you always want to look back at your bigger trades. Look at the trades where you banked maybe 4 or 5% in a trade. Look back and see how many extra times did I sensibly and safely with a real pattern capitalize fully. And then that would have averaged out return better in the future. And that's something I'm looking at a lot. I used to see these big trades, they used to just take off. They never used to pull back to the EMA. They never used to pull back to the support. And I used to be sat there thinking, well, that was just one of those trades that they just went without us. And at that point, my own stubbornness, I thought that can't be the case. People are still capitalizing on this, and there must be a reason why. So at that point, that was when I had the 10 EMA. So what I had is, let's say this was the EMA, and that was the 50. It didn't pull back to the 50. I used to see big trades, they wouldn't pull back. Then I thought, do you know what? Sometimes they might pull back to the 20, so I put the 20 on. And then eventually I got down right to the 10 EMA, just to think, why pull back to the 10, so I'll take it then. And then eventually I realized it was just a lot of rubbish and you don't need it regardless. So scaling into trades was the biggest thing for me to be able to capitalize, and it helps with your psychology massively. So I just want you to think about that. This is what we're trying to do here in Falcon, and understanding that a resistance line doesn't mean that much, because let's take a look at this. If we go back to the 4 hour, looking at the same pattern, because I remember this because I was looking at this exact trade, by understanding the bigger structure, which is that this trade, this whole position is just one big continuation pattern. So this move is just one big impulse, and this is just one big correction. So we know eventually this move, this continuation pattern is going to play out to the downside. The only thing that we don't know is how long can this correction last. No one would have known how long that can last. So the key thing is here, it's not about just scaling into positions and making a big percentage. It's about understanding that I'm selling this continuation pattern because it's possible that if I sell it anywhere from here or here, this could be the trade that keeps going, going, and going. And by not understanding how structure works, you'll forever, you may even bank the full 7% at the bottom. And let's say this was the one that broke. Take this, for example, look at the continuation patterns here. Impulse correction, impulse correction, impulse correction, impulse all the way. So by understanding what's happening here, the bigger structure, when you're taking trades from here, you're not thinking that I'm just going to sell that and there's some imaginary support that's going to hold you back, which doesn't mean anything. What you're going to do is realize, could this be the trade that is this trade? Because this is the higher time frame structure that will play out. The market is always obeyed to show longer term. Even if it goes slightly higher than what you expected, slightly deeper, it's just an evolved version of structure. You just need to understand what current structure you're in, and then it's going to be able to help you a lot more. So when we're looking at it here, you can see how simple by structure, how powerful it can really be. And for me, that was a massive eye opener. How many of you right now that just by trading structure have found it a lot easier to look at the market? Because what I want to actually do is I just want to pop on. Let's actually just put moving average on. If we just quickly put, I haven't used them in so many years, I don't even know where they are. Let's have a look. So we just put, let's just put one on. We don't want to get it too clustered. And let's say we put the 50. Make that a bit thicker. It brings me on to my next point. By looking at that, look how messy that is. And if I was to, even if I was to just, move to the side and put on some random resistance and support. Don't even know where these are going, by the way. So if I just see if any of those add up, we can have a look and see that there was resistance here. It bounced off here at one point. What did it do here? It bounced off a support there. This is now resistance because it bounced off that's previous support, that's new resistance. We can put on everywhere. What about here? It spiked through. It got a resistance. It got a support there. We found the support as it rejected off that low test candle. There's so many ways, right? So many ways that we can put that on, and then we can only show what it can do. But then what about when it doesn't? What about when it doesn't respect that? And this is where it just used to get, it just gives me a headache looking at it of how clustered it could get. And I've seen charts far more messier, and I think we will have with that, right? So just by looking at that, for me, just the key thing is about this. Let's just take a look at this. How many of you previously would have thought that, and I know, and I got taught this when I was 18, never trade through the daily 50 EMA. I didn't even know the 50 EMA was there until we just got into this webinar. So looking at it from that perspective, any trade, we know that the biggest structure is pointing currently, it's just that this is to the downside. But how many people would be held back by this limiting belief that, well, there's no point trading below the 50, the day 50, I'd need it to break and then retest. And then guess what happens? It breaks and it doesn't retest and still goes. And then you're left there thinking, well, it's just a trade that went without me. And then that's your justification when in deep down, you're pissed off, you're frustrated thinking, I didn't capitalize on that trade. So for me, I started to remove all of this stuff. And as I started to remove it, it just become clearer. It's like a breath of fresh air just looking at the structure from that perspective and realizing that it's the patterns. It's the patterns is what is really reliable, what is really helps us. And whether you're a swing trader or a day trader, and it brings me back to this point here. People ask me a lot, and if you're new, if you just come into Falcon quite recently, is why I want to cover it. If you're asking the question, can I swing or can I day trade? It works for both. There isn't just one or the other. You need to ask yourself, look at these patterns. They take a longer time to play out and think. It's not like when you wake up in the London session. This is beautiful about the trading this way, is that it can cater for your own time zone. So when looking at it from this perspective, ask yourself here, we're on the 4 hour here. So 1, 2, 3, 4, 5, 6, 7. I mean, we've got over a day's worth of candles. You need to ask yourself, these continuation patterns, they generally on the hour take 6 to 8 hours, if not longer, to form before we take them. So it's not like that if you have a 9 to 5 job, loads of people within Falcon have 9 to 5 jobs. It's not like if you have that, you can't take the trades. All you need to do is plan in advance, understand what structure's happening, and then you set your entries. And that's what we do here, of course, in Falcon. So by really understanding the structures and getting your trading right, knowing your go-to setups, this is how you're going to capitalize whether you're swing or day. And if you do like to take more of a swing style entry, then you can come to two. Because if you was taking, let's say, that trade that we went over on, let's say, the daily as a swing trade, and you're thinking, well, I work and I can't be involved in other trades, you definitely can. And you can take that as a swing style entry. And at the same time, once we get a pattern that develops for us to capitalize on it, like this continuation, you're able to add to it as well. And guess what? That's going to be incredible for your psychology, breaking limiting beliefs that you're thinking, 5% a month is good, when in reality, It's very normal in Falcon to be hitting those returns, and that's why people have gone on to hit crazy amount of results. For me, last year, trading this way, I was able to bank over 130% for my annual return. Now, when I look back on that, and I'm disappointed because I go through my own self-review and think, probably left about 70% on the table. There was so much more. So it doesn't matter how good of a trader you are, there will always be money, there will always be percentages left on the table. But as long as you're consistent, it doesn't matter. As long as you're hitting those kind of returns, you can sustain it. And the one thing you never want to do is the one thing I never wanted to do. I'm not saying EMAs don't work. In this case, I broke the EMA, kind of reached it there. You could argue that would be a trade to take, or it just got to the EMA. It's unlikely you would take that spike. But overall, you can see that sometimes it does work. What my frustration was is that in a trending market, it was fantastic. You bounce on the EMA, I used to take the trades, and I was actually doing quite well for a little while. But then what happens when it's ugly conditions? Can you afford to be able to spend 2 to 3 years when the market's in a sideways messy correction and not capitalize and just say, well, I'll just wait? Well, what if you're a full-time trader? You've got a mortgage, you've got bills to pay, you've still got to capitalize, you've still got to make money, you've still got to make percentage. So for me, I wanted to find a way like this with structure that I'm able to capitalize no matter what kind of market condition. So I hope you can see the true power of why trading this way is really going to help from this perspective. So with USD CAD, you can see how just the simplicity of that, the simplicity of understanding that how many people do you think would have not capitalized on that? How many people would have not traded through the EMA? Well, how many people would have set an entry there on a swing trade and then set their 4-hour 50 EMA as a target? I've done it. I can admit that. I used to do it all the time. And then I used to still see the bigger trade completely go without me and think, I missed out on 5 or 6%, so I left 5% on the table. And guess what they used to do? They used to fill me with fake confidence, thinking, well, yes, I left about, when I used to do my self-review, I used to think, well, I've left about 6-7%, so once I learn how to hold those trades, then I'll be successful. And I used to slap myself and think, how on earth is that going to work? Because if my model is flawed, I'm going to still keep taking profit at the 4-hour 50. I'm still going to feel uncomfortable if the candle just slows down on the EMA, and I'm going to see an imaginary support, and then I'm going to close the trade from emotions. When in reality, it's just starting the continuation, and there's a bigger structure at hand. And it brings me back to the overall bigger structure. Once you know how these bigger structures play out, when you're selling things, you're in a different psychology. At that stage, you're not in the psychology that you're going to sell that to the daily 50 or anything like that. You've got the psychology within Falcon that this is a big continuation pattern, and it's likely that this pattern replicate the impulse of the break longer term. So we have the potential for things like this. This could go as big as the impulse, or if not a minimum to the lower the correction, which of course we got to the lower the correction, and now we've started another deeper correction that we could still head lower. So this could be a longer term target. So knowing that willingly, are you holding yourself back by actually thinking there's imaginary barriers that are not there when reality could sell that? And that could have been the trade that went to the downside. So again, with the corrections, we didn't know how long it was going to last. And guess what? It corrected for a bit longer. We created more clear patterns here. As you can see, we just created an impulse, a continuation pattern, a move up, a reversal channel, an impulse correction, impulse correction, impulse correction, impulse all the way. So this isn't a shock when you start to see this move to the downside, because we've been waiting for this for a year. And when you do that, you're in a different kind of psychology to bank those longer term trades. Because I used to do the same thing before I moved on to another pair. I used to think that, well, I need to learn how to hold positions longer term. And it used to feel uncomfortable for me. When in reality, even when I would go to hold it longer term, I would hold it for, let's say, a week, and then I'd start to hold a trade for more longer than 2 or 3 days. It's a week now of holding this trade, and it's not really playing out. I'm just hoping that that candle shape on the weekly or the daily, it's still going to play out. I'm not understanding the technicals on the 4-hour and the 1-hour of the patterns of the nature of the market that actually tells you ahead of time and avoids you taking a lot of losses and avoids you giving too much percentage back to the market. I didn't know any of that, so I used to just hope. And when you think about it, it was ridiculous. I was hoping that it was going to play out. And the key thing is, when you're looking at these kind of charts, it's especially within Falcon, you're not really focusing on a fact that it's hit a resistance or it's breaking a resistance. The question that you should always be asking yourself, especially if you're new to Falcon, is how does it break? How is it breaking? And if we go back to that exact example, I had the parallel channel on here, especially when we had one touch, two touch here of looking at this channel. So when we zoom in at the resistance, how many times has people seen the break of resistance, and then you're thinking, well, that break of the resistance means that it's a break of the resistance is going to move to the upside, and then you just see it completely reverse, and you think, I didn't see that coming, and in reality, it's just going a little bit higher to then break the resistance, and it's responding to this pattern to then still come to the downside. So what you'll see it as is a false breakout. And if you're reacting to the market, think about it like this: if that actually has to move up and move back down, and if that has to happen for then you to analyze that and say, oh, it's a false breakout, then you're cutting yourself short. You need to be predicting that that's a possibility in advance. Otherwise, how on earth are you going to capitalize? How are you going to react? If you're always reacting to the market, you'll forever be a slave to the market conditions, and you'll always want something to happen to satisfy you. You'll always say that you'll have this kind of language as, oh, I need it to do this and I want it to do that, and if it doesn't do this, I'm just going to leave it. Well, you can sit on your hands for 21 days while we'll still capitalize on the market. And that's what I used to do. I used to wait one more day. But waiting one more day, how could we define, and you hear me talk about it a lot, right? You can't just wait one more day. You need to understand if the pattern needs another day, if it needs another 3 or 4 hours, then perfect. But if you can't define where you're going to wait, then you'll forever just be waiting. And then you'll wait another day, and you wait another day after that, and you'll just never know. And that's the kind of anxiety that I went through. And I don't want anyone to feel that anyway ever again. So I'm really glad that you're enjoying this kind of style, and you realize how poisonous these lagging indicators can be in support and resistance. They're just not needed, when in reality the market is proven that it responds to pattern identification and market structure. Will it bounce off resistance and EMAs and pivots and stuff? Yes, some of the time. But throughout the next 10 years, will it be sustainable? No, it's proven that it's not sustainable. And that's why so many traders I've personally liaised with and spoken to had an incredible trading year in 2014 and then been struggling for a couple of years. How on earth can you make 100% a year in 2014 and then in 2015 be in the minus, and in 2016 be in the minus? How does that work? You're subordinating to the market conditions. So this is why I really want to hone in on this as much as possible, so you see how powerful market structure can really play out. So let's take a look at another example. Let's have a look at Kiwi CAD, or let's take a look at pound dollar actually. So pound dollar, a major that we focus on a lot. Pound dollar is a very, very good one for structure. It's one that I personally trade a lot as well. And again, I'll keep up to date with the questions as much as possible without going too off on a tangent, but I'm hoping it's really, really helping me explain this overall structure of why it's going to be beneficial to you. So by going through, some of you have been in Falcon for a while, you're going to see this as kind of basic things, but it's always good to refresh yourself of why we trade in structure. So let's take a look at pound dollar. So pound dollar, one thing that I want to show you guys and girls is this. So I talk about, and this is going to be a key thing for Falcon, I talk about when you're trading structure, when you're trading things, what is the most crucial things about if something breaks a trend line? It's that question that you want to ask yourself, how did it break the trend line? Let's take a look at some previous price action. Firstly, from a pattern identification perspective, look at how clean and simple this is. So we're on a weekly here. We can see that this, if I just zoom right out, this is a bigger ascending channel. And this is how we define it. It impulsively broke. This is just one big side correction. It's a big continuation. We impulsively broke to the downside with many continuations. And then this is a correction. So as you can see on pound dollar, within about 5 seconds, you can see exactly why structurally we're expecting this to come to the downside one more time. Because we can see since day one, it's proven that that's how the market responds. And if I even go to something like, let's say, go to the monthly, ask yourself in this kind of situation, yes, this is a 2008 crash, but would you have traded into the monthly 50 EMA? And we can see within there, This is just corrective behavior. This is just the arc. This is everything that you learn in Falcon. This is the arc, the impulse up, and we've got the correction, continuation, the impulse, and within there, on the weekly, the daily, the 4 hour, the 1 hour, was many continuation patterns. And you can see quite nicely how it responded to the typical beginning of the correction. When we're seeing something impulsively break out of a pattern and a little tip, we know that there's a very, very high probability if it impulsively breaks the pattern, we will get to the beginning of the correction. And at the beginning of the correction, we're either going to reverse or we're going to continue lower. And at this point, you can see all we've done is just create a bigger continuation pattern to head lower. And now you can see this is just a sideways consolidation to head lower at this stage. So when you look at it from that perspective, look how clean and simple it is. And when we go to, let's go to the daily, that's where you really see a lot of the patterns that get people caught on the wrong side. Let's even just take a look at that, just right here. If we look at this pattern, there's the daily 50. If you didn't know what this pattern is, and I move that there, what would that look like when you look at that? What would you tell me? People would be saying that's looking at resistance. So there's a resistance there, spiking there, resistance there, bounced off there, it's broken through, looking for buys. When in reality, that EMA means nothing. It meant nothing the whole way down. It tagged it a couple of times, it just broke through. And in reality, that is just a continuation pattern to the downside. The same way, that is a one big consolidation continuation pattern. And that is a continuation pattern to the downside. When you combine that with the fact that, without getting too into it, that we've got the reversal within it, we've got the pattern within the pattern, which we know is a higher probability, that impulse, correction, continuation. Real simple. So breaking the EMA meant nothing. How it broke the EMA still meant nothing, the fact that it was an EMA. So for us, we knew this oval was a pattern and that we're not taking it from a support or resistance. We're actually taking it from the wick. So we're looking at something like this and seeing that, right, it lines up quite nicely with it. It's just penetrating it. However, we want to look on the lower time frames, how is penetrating that? So it's the nature is what you want. If the nature is quite corrective, so we go to the 4 hour, for example, and then have a look at that, you'll see how, even though that was breaking, all this was just an extension of the pattern. That was just a reversal channel. Looking at that now with the arc, we can see that this is something we would be expecting for this to come to the downside. When in reality, people are getting too caught up in, it's broke the resistance, now it's new support. Broke that resistance, it's broke that support, now it's resistance, etc., etc. There's too many of these things that we go about, right? And when we go into these kind of areas, it really does harm our results. So you can see that the market has just forever been within that continuation or reversal, and that's exactly what we're doing. So looking at it from that perspective, we can see it here, it's a lot clearer. Now, I just want to remove this EMA because it's giving me a headache even looking at it, but you can see how it's really just not needed. Let's quickly go to the daily chart. So if I go to the daily, even there, I mean, we could go through so many examples, but looking at it here, look as it trickles its way down, knowing what you know now, that broke out of the EMA. What gave us the indication? So what gave us the indication is the fact that we've got the move down, the correction. Yes, we broke the EMA, but how did we break it? So we broke it correctively. So these are the main things that you want to be focusing on. You want to be focusing on how did it break something and did it still continue? At this stage, it broke it correctively and it still dropped. Again, that's not a surprise to us because we can see that the nature of the market was really the true thing. And that's what we learn here with Falcon. So Falcon nature really is a key thing. So if you're joining us and you're quite new to Falcon now, then you're going to learn how the nature of the market is going to be really, really helpful for you. And again, like I said, if you've been in Falcon for a while, this is just a bit of a refresher for you, but it's going to help going back to basics as well. But I really want to make sure that people understand the core principles of why we're looking at charts this way. I mean, even just having that ray line in that I've got, you can see it meets up quite nicely with that resistance. It just happens to spike off of that. when in reality, that's got no relevance, this line, to that resistance. It just meets that time. But when in reality, it was focusing on this pattern, it was creating this deeper, larger structure. And that was what was important. So it's super key to really understand what structure you're in, what phase you're in. Going to answer a few questions now, guys and girls. Exactly that. So really understanding that if you just look at any currency pair as all the same. So let's say, for example, if we just get a couple of currency pairs and we look at pound dollar, we look at dollar yen, and then we look at euro Swiss. Does pound dollar, you need to ask yourself the question, do you believe that pound dollar responds exactly the same way as pound yen, pound CAD, dollar yen, or euro Swiss? And these continuation patterns that we're talking about. So let's say we're looking at a bear flag. So on the 1 hour, let's say you get an impulse and we get action and we're looking for the sell. Does this pattern respond to the same probability on pound dollar to euro Swiss? So you need to ask yourself that question. If you don't know the answer to that, then you know that you need to learn more about the technicals, which are in the right place. So by understanding that not every single currency behaves exactly the same, there's different probabilities. And if you just have one and you're just going to trade any pair that gives you a setup, you'll just scan through all the 28 pairs, the exotics, commodities, and see that high test looks good or that structure looks good, and then your results are not going to be a true reflection of that. That's why within Falcon, when you're really back testing, you're understanding the forecasting part of it, you're understanding how price patterns work to the different pair, which Caesar said, you're really going to figure out that you need to know what not to trade as well. So as you can know within Falcon a lot, we don't really trade Swiss pairs, right? I think we've all experienced them. How many have had issues with Swiss pairs? They can be manipulated a lot. They're very spiky. And there's a few other pairs that we don't trade. They're not just all Swiss pairs, but we've back tested that it's not going to be reliable. So it's not going to serve you. Just by doing that and having a cleaner watch list is also a breath of fresh air, just by understanding that. Let's just remove this EMA now. And you can just see how cleaner we really start to see everything. And I'm so glad that you guys and girls see the importance of just keeping things simple as possible. You took all the Swiss pairs off your watch list as well. Nice, nice. So what we're going to do now is just do a little bit of a Q&A. So if anybody's got any questions, and in reality, some people ask me all the time, how long is it going to take me to really learn the structure? That really does come down to yourself, of how hard you're working, how many webinars you attend, etc. But you've got all the tools here, and it leads me back into the community. This community, it's got a different vibe to what I've experienced before within the trading space. Bearing in mind, I've been involved in trading for 9 years. I've met a lot of traders all across the world. It was always full of egos, etc. And within the community, everybody just wants to help each other, and that is truly something special. And I absolutely love that. And to see the meetups and to see everything happening, what I did when I started to realize I wanted to create this project, I was even writing down and visualizing these things happening. I was visualizing people telling me that they've had their best trading weeks, months, years, that they've got clarity, all of this kind of stuff. And to see that of when I wrote that down, and now I've had these conversations with you guys and girls, it's incredible to see that. It really, really is. From scalping. Again, I myself, I've never really done scalping or anything like that. But for me, it's always the sustainability, right? So it's always about what can you sustain longer term. I don't think people think about that enough, and you don't realize it. And it's no fault of your own, because we're only taught what we're taught, right? I've been taught by so many different mentors, think that this must be the right way. This must be the right way. But for me, again, it comes down to the transfer of information. You need to know how to transfer that information to somebody, right? Not every good trader is a good coach as well. You're not able to actually coach people or transfer that information. For me, in my younger years, from 20 onwards, I learned a lot of communication. So I know that one of my high skill sets is to be able to communicate the information for different types of people. And I've seen that, and that's a reflection of the community's growth. So I'm looking forward to seeing as many people hit those results. It is indeed, Chris. That's a really good observation. And to be able to share the ideas help each other, hold each other accountable. We're just getting started for what we're really going to achieve. But how have you guys and girls been finding it so far within the community? And what would you say is the biggest thing that's helped you? Because it may help people that have just joined us recently that are quite new. Awesome, awesome. Pure Falcon style, love that. Epic. Make sure the market break even method. Lovely. So that's a good question. So for me, I prefer to just have one color and it's just an option. So you can see even on my screen, if I was to get a trend line just very quickly to do this, I can change it to monthly, weekly, daily, 4 hour, 1 hour, or a pattern line. And overall, I did used to do different colors, but eventually I just found to keep it all one color. I prefer it. So that was more of a preference because I know some people like to have the different colors. So there's no right or wrong in there. Exactly that. So another thing, break even method, that you'll realize that with that break even method, how many times do trades just you get triggered into the trade, and it just might be the way you traded previously, that you get triggered into the trade and then it completely reverses? Or how many times have you taken those really good trades and they don't go your way, they take you out for a loss, and then you just think, well, it's just one of those trades that didn't work out? I can almost guarantee you can go back and figure out what happened there. It's only a very, very case that it created a deeper struggle or something happened. How many people leave money on the market? They give back too much profit back to the market. So you have terms like, I'm going to give it room to breathe. And then because you can't define what that means, you just kind of just leave your stop open. And you might be, how many people, and I've seen it, even good traders within the Falcon community at the beginning, having 7% running in a trade and they let it pull back to 2%. Now knowing what you know, that's absolutely insane. There's so many structures and cutoff points that can help you that you don't give that much money back to the market. You don't need to. And what you're saying with your psychology there is you're left the market. You're taking a message from the current market conditions. You're taking them from the current market structure. So it'll be the most true, reliable. Indeed, the work ethic is incredible. The community is absolutely phenomenal. Yes, sir. Huge part of your success. This month after restart. That's incredible. Absolutely love that. They've been working hard to get that as well. It's not one of these, you just, I think people think that because the community thrives so well that, within month one, you're just going to get it. Some people it clicks with really quickly, but when in reality, it does take a bit of work. But once you get it, you've got clarity. There's no gray areas. It's black and white. It is what it is. Once you get good at it and you know your go-to setups, you've got your trading plan, you're set. You just need the experience. You need to understand how these patterns work. That is the part that takes a little bit of time. So you get to the level of experience that you are, and then after that, you can then look back and you can reassess after every quarter and say, have I been sticking to my plan properly? Is there anything else I need to refine and learn? It's always the person that thinks they know everything very, very quickly is that they end up stumbling. It's the person that wants to keep growing, keep learning, doesn't have too much of an ego. They're very open and honest to information. They're open to understanding when they went wrong. Are the ones that grow the quickest and really learn. Break even definitely. It's fantastic. Exactly. And with that work ethic, people are leading by example and people are thriving within the community off of that. They really are. And to combine that with the fact that the community is setting goals. I mean, how many people, and you can be honest, before you came into Falcon, did you set really tailored, specific goals? So for me, with my goals for the rest of the year, of course, I work on things like I've got property investments and I work on other projects. But the big, big goal for me is to create as many success traders within Falcon as possible. And then I want to expand that project, as I said, through the community. And that is the biggest compliment for me. The biggest compliment for me is that. And one thing that I see within the community is the clarity. You know, when I speak to someone on a one-to-one basis, or of course I've had the pleasure of meeting some of you already, to actually see that clarity that you now believe it's possible, that is the game changer. That is when I can see, you know, when I can look you in the eyes and say, do you actually believe what you're doing now is going to get you those results? I know hand on heart that I can say, I know you're going to succeed. It's only a matter of time, as long as you do this, this, and this. It's not a matter of the conditions of the market. It's a matter of if you genuinely stick to that, it's going to be more difficult for you to fail, because how many times you go through these positions and see these reversals play out when they do this? I prefer to take it as a risk entry instead of a reduced risk because of this. Eventually, you're going to have your plan that suits your personality. So you're not going to idolize anyone. Like I said, I never want people to idolize me. It's a very, very disempowering state as a mentor. For me, I want people to be able to be the best versions of themselves. And I realize, I know that people are going to hit better returns than myself. And that is an incredible feeling because people have done it. And, you know, that's a big compliment for me. I absolutely love that. I know that I have my consistency, and everybody's going to be on a different journey. Everybody trades a different size account. It doesn't matter if someone makes 13% and you make 12%. Doesn't mean he's better or she's worse, etc. It really comes down to, do you believe what you're doing is good? Do you have clarity? Do you enjoy trading that way? Because this is one thing I want to quickly share. I've traded in a way where I was actually making money, but I was anxious all of the time. So then I knew eventually this isn't going to last because I actually feel uncomfortable every single time I trade. If I was in a trade, I'd have to check it every 5 seconds. If I was in profit, I would always feel like I need to take money. And then what I did is went through a winning streak of, I think it was like 19 positions, where even if the trade was going to slightly reverse, just because of the fear of losing, to close it. And then I used to think I was going to win. When in reality, I was losing. Even though I was winning, I was actually losing because I wasn't even allowing myself to take a loss, because it just so happens I was good at predicting the way it was going. If it went that way, as soon as I was in a bit of profit, I'll bank that quickly just in case it reverses. So I was more addicted to this winning streak rather than actually letting the percentages play out, which was a downward spiral. So you can be profitable, you can make money, but it won't be sustainable. So for me, it goes back to that same core principle. I want people to feel that they can sustain it, and that's what's happening within the community. Of course, it's not going to come overnight to build that confidence, but it happens. Conceptual tuning goal available. So the book, I'm going to be doing a second order, a second launch very, very soon. So I'll definitely keep you guys and girls updated with that. Of course, feel free to just pop me a message in Slack or in an email, and then I'll definitely pop your name down for that. You're coming from me, Caesar. Your percentage is on fire. That's awesome. It's good. I love the competition, of course, healthy competition, and you know, it comes with goals within Falcon as well. We really are setting accountable goals, and to see people achieving them is fantastic. The replay button, yes, I do. I still use the old school way that I did in the feature topic within the site of how I backtest, and then what I do is I use the replay tool to then observe the market, and I use it more so when just after I've taken a trade as well. So when I'm actually going through my own trade, I look at it, I go back, I use the replay tool and see how that played out. Was there anything where I could have managed it a little bit better? So I use it slightly differently. But overall, you can completely use it for backtesting. It's sped up the process massively. It's so helpful. Definitely, definitely. This year's results is transforming for myself. It's increasing massively as well. And I knew that for me, I'm gonna just keep evolving. I know that I'm gonna keep evolving as a trader, better and better. My style has slightly changed throughout the year. I was a bit more conservative, and now I'm slightly more aggressive. Just because I'm slightly more aggressive, it doesn't mean that I'm taking 20 or 30 trades. In reality, you guys and girls know it's about 8 to 10 trades a month. It just means I may be slightly more aggressive with my entries, so more risk entries. midweek around the US market opening. So with recording the midweek market review, it's at different times. So it's always in and around within 2 hours of that kind of time zone. So for us in the UK, that's the middle of the week. So that's the time why I record it at that time. To be exact, it's 134, so 134%. So it's an average of 11% a month. When you put a bigger figure, it sounds like a bigger figure. And I don't want to downplay it, but it does sound like a bigger figure than what it is, when in reality, it's about 11% a month. But looking back through my own self-review, I know to be better and better as I'm getting a better trader each and every year. I've had bigger years than that before on less capital, so it's different. And one thing I've noticed is one I want to touch on a lot. You need to be prepared for that capital. And a lot of people say to me that when they come into Falcon and then they come into trading, they ask me how much money should I start off with, right? They always ask that. And in reality, it doesn't matter at that stage. The first thing that you should be asking yourself is, how can I get good at trading? How can I possess the skill? And I know, because I've spoken to so many of you in the community that say, oh, I haven't got access to this money, I've only got this amount. And I always say, focus on the results, get good at the results, and I promise you, you will attract the money, you will find the money, people will give you the money, and it always happens. You thought you was going to start off with, 2 to 5,000, and then once you've got the skills, somebody out there wants to invest 20 or 30,000, and you didn't expect it. And I know that, so I've gone through those kind of things. So focus on getting the actual skill, and then you're an asset. You're a very powerful asset because you're a price action trader. Think about it like this: when you're learning this way, because you're learning the true core price action of how the market actually really truly works in the most accurate form, when you're presenting an investor or a friend, family member, whoever's going to invest in you, when you can confidently say that I trade this, this, and this, and I don't trade these for this reason because of this behavior, and I've done this back testing, and we know how that moves. We know the consistency of this pattern. This has been sustained over years. Think about the confidence and backing that up with results to show them this is what I've done over a 12-month period. Do you want to invest this money and I'll give you this return, etc.? Negotiate what you want to negotiate. Think about the confidence or the difference of the next level of trader that you will be compared to somebody who just trades support and resistance. And it's not to slander it, because I used to trade it myself. It's just I know that it's not going to serve you longer term. And if you think about it, we're trading in a way that is always going to evolve. Now more than ever, you've got John the builder. Sorry if your name's John and you are a builder, but without stereotyping, but you do have that person that now invests in crypto and now trades, right? So if someone is looking to get into Forex, the first thing they're going to do is go online on YouTube and type in beginners Forex, and it's going to come up support and resistance. This knowledge isn't hard to find, it's free, you can find it there. And when you find that knowledge, you're going to start trading. And because I know people that have done this, and I've speaking to people that I know, friends of friends, and they've got a £5,000 account, they've got no trading education whatsoever, and they're trading on these platforms. And like, oh, so how long have you been trading? And they're like, oh, never, I don't even know anything. I just went on YouTube and saw a couple of videos. That's insane to me that people are doing that. And more people are learning this way. So more people are going to be caught on the wrong side of the market. So Falcon nature theory is going to get a higher and higher probability as time goes on. As more and more people trade that way, they're going to get caught on the wrong side of the market, just creating extensions of these reversal patterns that we see. So we're able to capitalize them further. So when people ask me, how long do you think it can last? Well, it's only going to get better. It's only improved over the years. So for me, I'm very, very excited. If you can trade through these conditions, if you can learn through this, then you've got a very, very rewarding lifestyle ahead of you, I can tell you that. Exactly. People think that you're worrying about the wrong things at the beginning. You're thinking about how can I get this extra money. You're focusing on the end part. You need to focus on the beginning. Get good at it first, and then you can worry about that. Like I told you guys and girls before, the amount of times that I've been literally just, in my office, and people know you're a trader. They want to knock on your door and say, if I'll give you £50,000, what return could you give me? People want to throw money at you because you're an asset. Remember that. And if you focus on the skill, you'll attract the money. Just last week, one of you, I'm not going to mention names, one of you in the community, you didn't think that you was going to get that amount of investment to start off with, and then now you've got nearly triple the amount you thought you was going to start with because you focused on the skill first and you became good at trading. You didn't worry about pips, you didn't worry about how much money you're making. You focused on being a good trader and doing that as what it takes to do that. Exactly that. So with investors, I would go to networking events. So networking events are always really, really good. So if you go to property events, you're going to find investors. Any kind of financial networking event, you want to make sure that you go there. It doesn't matter if you're 18, 17, 21, go there and show that you mean business. Hand out your business card, network with people, tell people that this is what you're doing. You might go to an event and you're not consistent yet, and you might meet an investor and say, do you know what? I'm just going to be honest with you. I'm not consistent yet, but I'm learning this, and I'm going to be looking to pitch for investment people. And I know I'm going to be a good trader because I'm on my journey. I'm very, very close to doing that. Would you mind if I give you my business card and maybe we can liaise in the future? He might be able to. He might be able to in the future invest in you, and he's going to respect the fact that you've been honest. And then you can go and show, well, this is what I done. When I spoke to you, I wasn't consistent. I was on the verge of doing that. Now I've got 12 months of consistency. Do you want to invest? It's about networking. It's such a basic concept. If you're sitting in your bedroom and you're only surrounded by your friends, it's not going to just come to you. And I went to loads of different property events to meet different people. Nice, nice. Some of you are quite young, right? So how old are you guys and girls, if you don't mind answering that? 17, 29, 26, 24, 25. So a nice mixture. Awesome. 27, 24, wicked. Love that response, Melissa. I don't believe that. Nice, nice. And you all have goals. You have goals to be financially free, and that you want to really have that clarity. So rather than floating with the idea that you think is going to happen, you know it's going to happen. So for this year, first quarter's done. We want to make sure to the rest of the year that we really plow into being the best traders that we can be and have the results to back that. Get the investment. Some of you already have access to more capital, which is great, and you really will be able to create a lifestyle that you look back on. You'll be glad you put the work in and feel proud of yourself. Feel proud that you're not just an average trader. How many of you now know if you spoke to a different trader that wasn't involved in Falcon, that didn't trade this way, how much more knowledge and clarity do you have? And it's not to gloat or anything like that, but it's almost frustrating, right? When I see someone trading a certain way and they're losing money hand over fist every single month, they're just missing that piece of the puzzle. That just so many tiny small 1% that can help capitalize on so many positions. It's crazy. Could invest. How do you deal with a large account injection? So that's a really good question, Will. So the easiest way to do that is that you want to manage that accordingly. So I wouldn't take the big investment straight away. You do it in stages. Always do it in stages. So let's say that you've got someone who wants to invest 100,000 into your account, and you think, you know what, I'm not ready for 100. I've only ever traded 5,000 now. So you do it in stages first, and you take on 25, and you might think, well, even that's a little bit. Well, it's only because you're taking on the weight of the end figure. I talk about this a lot, and this is a major thing. So think of it like this: if you're going to take £100,000 for someone, you need to look at that. What are you risking? You're only risking 1%, right? It's risking a low probability model. So that's £1,000 out of the 100. But you're taking on the weight of the £100,000. Everybody does it. Everybody that scales their account up, I've done it. That you take on weight of the bigger amount when in reality you're only risking £1,000. So to start off with, I would start with the quarter of that anyway. So you start for 25, build that up over a couple of months, and then keep scaling that up. Before you know it, you just adjust to it. It's one of those things that's kind of hard to explain as well because everybody does it differently. But you will adjust the capital. Right now, you're thinking, oh, it's quite a big amount of money, but after trading it for a month, you'll realize that it's actually not that much. It's just the mathematics, and you adjust to it. But everybody's going to adjust to it at a different period. But again, I would go back to the same thing. Focus on feeling completely confident in your results, scaling that up slowly, and then you just keep adapting to it and you keep adding to it. Exactly, 100,000 sounds like a lot. 1K per trade doesn't. So it's how you can minimize that. Legalities is different in every single country. So without going too into depth of that, you definitely want to speak to a lawyer because I've spoken to so many different people and it changes in every single country with the different laws. It's a good observation, Marcus, and I've done similar things like that. But at the same time, you want to, if it's a fear, if it ever becomes a fear of the larger account, you don't want to hide it because then you're scared of it. You want to face it head on. You want to really down into it and write it down and have the conversation with yourself. That 100,000 is only £1,000 that I'm risking per trade, and if I lost £1,000, would it really impact my life? I mean, ruin my life. If any of you was to lost £1,000, would it ruin your life where you wouldn't be able to get back up on your feet or ever succeed again? Probably not, right? No one wants to lose it, but if that was to happen, and we take on too much of the weight of that, so that's helped me anyway. That's my own experience. I would minimize the impact by looking at it for what it is. The fact that we have the break-even method and the 0.5% method, a lot of the time when you're trading a large account, we have a practical strategy that's going to help with that. So a lot of the time when you understand your go-to setups, you're not really in the minus that much when you really know what you're doing. Because when it impulses out, you're either break-even, so you take a break-even, so there's less emotion there, or you're taking a 0.5% loss, there's less emotion there, your psychology is protected, or you take a full 1% loss now and again. And once you get it, you're going to find that you're going to not only bank profit and then just lock in profit as well. So your emotions are even more intact. But what I used to do is I stopped managing my trades by looking at the platform. That is the worst thing that you can do because you're seeing money go up, go down, and as you start trading more capital, you see it go up, go down. So what I used to do is I used to focus on TradingView and I used to manage it accordingly there, not actually manage it trading view, but I used to actually look at the price action, look at the structure, rather than seeing the money go up and down. So it's definitely something that you want to start off with if you're finding that you're looking at, oh, I was up £900 and now I'm down to 600. You start placing value on that money, and that's the worst road that you can go down. I think we've all done that. Of course, I mean I've done that. Everybody's traded more than one. Well, not everybody, but the majority of people have traded more than 1% because you've gone off a feeling, right? You've thought that that trade looks good, that feels good, right? We've all done it, and in reality, this is a flawed system. Exactly that, Michael. It's just understanding that it is part of the game, right? Understanding that you need to lose to win. And once you really, I think people they say that a lot, and it makes sense, but you don't truly accept it because as soon as then we've seen this, and I still see it within any community, when you take a loss, you try to always figure out why did that happen. You start asking questions, oh, why didn't that one work out? It may just be probability that one didn't work. It's not always why did that get strong, why did that get weak. It's just if the structure didn't play out, the structure didn't play out. It's all about probability. The majority of the time, the structures do play out. We can see that for years and years and years. So I really hope that's helped, guys and girls. Just wanted to go through more of a basic understanding of what the mission is for Falcon, so you really understand why we're doing this. This isn't just another strategy that sounds good, do a little bit of teaching here and there. I want people to hit results through the roof, and it's happening. It's going to continue to happen, and the community is going to grow at an incredible rate. And the work ethic and the transparency and the honesty of the community, it's so genuine. I've never seen anything like it. So I'm really grateful to have you on this journey with me, and I'm looking forward to seeing everybody's progression overall. Wicked, wicked. Glad you guys and girls enjoyed it. Appreciate it. I appreciate you all attending, and that's been awesome. And of course, look out for the midweek market review on Wednesday as we look at the development of the currency pairs. Yes, this will be going live as well. It'll be recorded on the site, so you can check this out again. Awesome, awesome. Appreciate you all attending all over the world. It's been fantastic as always, and I cannot wait to catch up to you very, very soon. Declan, I'm not sure if that's a good thing or a bad thing. Have an incredible week, everyone. You're welcome. Take care, guys.